Well, welcome to my real estate show. Today we are doing episode number 8. I'm super excited about the consistency that I've been able to create with this sequence of videos, bringing you guys value with related topics to my industry of real estate. And today I have an expert in home loans. She knows all the ins and outs of all the different things that can be done to lower your monthly payments, to help you guys secure the best interest rates, and help you get a mortgage for your new home that will fit your needs. So I'm super excited to have my friend Delayne Bravo from Jet Home Loans in my show this morning. So let me go ahead and bring her up. I hope you guys give her the very warmest welcome. Hi.
I am on the move today. I'm parked, I promise.
Okay. Good. Yeah, just be safe.
Yes. I'm just in a parking lot, but I'm so happy to be here. I know this is my second time. I'm so glad that you invited me back, and we have a really cool topic for today.
We do. And I just want to give our viewers a little bit of a background as to how we came up with this topic. We recently had a client, a mutual client, and I won't reveal too much detail, but the basics. I'm hearing some echo in the background. That's weird. Okay. I don't know what that was, but that's okay. I just heard some. Did you hear that?
Yeah, it's like echoey. Can you hear me?
Yeah, I can hear you just fine. Are you on a microphone?
Mm-mm.
Okay. So the topic is buying down your private mortgage insurance. And one of the things that I have seen is that most people still think that you have to put down 20% to avoid having private mortgage insurance. And we recently had a client in common. I won't reveal for her own privacy too much information, but they were looking to put down 20% on this beautiful home that they're buying, and a price point of about $500,000 for the list price. So easy to calculate 20% of that. That's $100,000 right there. And they were thinking, okay, that's as much as we're going to need to come up with to avoid PMI on a big purchase like that. And one of the things that I am so glad that Delayne was able to bring up is the ability to buy down the private mortgage insurance. And by doing that, being able to make the payments more affordable. So that's the topic of our conversation today. And we have a whole lot of knowledge in this topic. So I'm excited to hear about it. Let's start off from the very top. What is PMI? What is private mortgage insurance, Delayne?
Absolutely. So basically, private mortgage insurance is an insurance that is required on any conventional loan. It's also, and I'll get into some other types, but for the purpose of us starting, we'll talk about conventional. It's required anytime that the buyer puts less than 20% down payment. So conventional loans can be all the way from, there are some 0% options, but we'll say 3% down to, you could do 90% down. But if you are under that 20% mark, then you are going to be required to have private mortgage insurance. Now that we've explained when you need it on a conventional loan, but actually what is it? So when you are purchasing a home with less than 20% down, the lender requires this mortgage insurance as protection for the lender in the event that the buyer does default on the mortgage. So it is almost like an insurance policy for the lender. This is not lender specific. This is from up top, the investors that give every lender in the country their conventional loans. So that's kind of what it is. It's an insurance policy for the lender in case the buyer defaults on the mortgage.
Okay, and when we talk about the insurance policy on the loan, these are specific different types of loans. Like I can think of, like, for example, a VA loan. That would not be required on a VA program, right? Because they automatically have the benefit of not having to have private mortgage insurance, correct? It would be more for like FHA programs and conventional loans and some of the other programs that are available. Is that right?
Absolutely. Yep. So every different type of loan has different PMI. The only loan who does not, or which does not have PMI in any way whatsoever, is conventional over 20% down, or VA is zero down payment, no mortgage insurance. So VA, that is a benefit for our veterans in active duty, as well as conventional. Conventional under 20% requires PMI. FHA loans require PMI. USDA requires PMI or some form of PMI. The catch is, and it's not a catch, but it's just an interesting thing, is on FHA, which is 3.5% down payment, you have your monthly private mortgage insurance, your monthly PMI. It is on for FHA for the life of the loan. It does not come off of your FHA monthly payment. Conventional comes off at the 10-year mark automatically when your loan reaches a certain value, loan to value percentage. So conventional falls off at 10 years, FHA, life of the loan.
Right. Okay. So with that said, the case that we were talking about, it was a conventional loan, and PMI on a $500,000 home could be substantially, what, a few $100s a month built into that monthly payments?
Yes. So the way PMI is calculated, and I'm not going to bore everybody out there with a ton of boring calculations, but PMI does take a couple things into effect. It takes into effect into the calculation the amount you're putting down, your credit score, and your debt ratio, as well as, is it a purchase? Is it a refinance? What state are you in? So it does take a look at the factors of your file. For example, that $500,000 house with 15% down, you could have two people buying the exact same house with the exact same down payment. If one of them has a 640 credit score and one of them has a 740, that PMI is going to be vastly different because the factors are different. So this buyer did have good credit and also had that higher purchase price, but it was on them with even all those perfect factors. It was like $200 a month because of that higher purchase price.
Right. Okay. So some of the ways that we can avoid PMI, like you said, would be to put down 20%. If you want to put down 20% or might not have the ability to put down 20%, what are the alternatives out there that they could look at to make their monthly payments more affordable?
Absolutely. So there are three different ways you can have your PMI. And I'm talking only from here on. This section is just about conventional, because FHA, you don't have these options. It's monthly, every month for the life of the loan. USDA, same way. But for conventional, you can pay it monthly for the first 10 years, which we just discussed. You can have the lender pay it for you, and there is a trade-off in that, and I'll talk about that. Or you can pay it off at closing. And there are pros and cons to each method, but we can go into that. But there are different ways that you can tackle PMI. It doesn't necessarily have to be monthly.
Gotcha. Okay. And I did want to mention something for our audience here real quick. We are taking questions in our comment section. So if you're watching me live, this is the best time to ask a question because we can answer it right here on the spot. And I'm super excited about using this feature. So I already have a question from a good friend of mine that's watching. Jeremy, so let's go ahead and see if we can show up the question. There it is. How awesome is that? Is there a PMI marketplace, and can I shop around for a better deal on PMI? Great question.
Oh my gosh. This is so fun. Okay, we didn't have this last time, so this is fun. Hello, Jeremy. So basically, there are about 6 to 7 companies for PMI that all lenders typically have access to, and they have rates. Just think about interest rates, how different banks have different interest rates. For the lender, there are different PMI companies that have different rates. As a buyer, you are going to rely on your lender to shop that PMI for you to give you the best deal. And we do have a system where it does, like I said, take in all of those factors, and it'll show me every single company and what they're offering. So I can ensure that we are giving you the best deal, whether that is monthly, paying it off, or having the lender pay it. I will ensure, or your lender should ensure that for you.
Gotcha. Okay, well, thank you. Thank you for answering that. Any other follow-up questions, please be sure to put them on the comments on Facebook. I am also streaming live on YouTube. So if you're connecting with us via YouTube, be sure to subscribe to my channel and hit the bell, smash that bell so that way you can get notifications when we go live. Yeah, so, and I also have another friend of mine here, Tim Song. He's saying hello. It's so good to have you on the show. I'm glad that you're here. If you have a question about the topic, please be sure to put that in the comment section. I love this interaction. It just makes the whole show so much more fun. So, okay, so back to buying PMI. One of the things that we looked at as a solution for this family was the completely buy down this option at closing. And tell us exactly how that works. That because you brought up a really good solution for them. Go ahead and share with us.
So I have an example here, and I did the math so I can easily share it for you guys. Now this scenario is not the exact same scenario as that family, just because I wanted to keep a fresh scenario for us. But this is an exact example. So let's say that you are a buyer and you want to put 5% down, conventional. You have a 740 credit score, everything. You buy in Florida, everything else. You have your options of your monthly PMI or your single premium is what that payoff is called. So if you had it monthly, it would be $83 a month. And we know that is going to fall off at that 10-year mark. So let's fast forward and say you're in that home, right? How long or how much have you spent at that 10-year mark in PMI? It is $9,960. Okay.
Wow. Is that paying it monthly for 10 years?
Paying it monthly for 10 years. Now, you don't think about that because it's just in your monthly payment. And if that's what we have to do because you're tapped out at your 5% or you just don't know you're going to be there, that's fine. And I have many buyers do that. But I always bring up this solution, and I'm going to work this back to the buyers that we helped. Somebody, I see your bank statements, and maybe you have extra money in your bank account, and you're telling me that payment's a little high. What can we do? I can offer you and say, you can pay off PMI one time at closing, never ever have to deal with it monthly again, and it's $4,037. The exact same PMI. You get a $5,500 discount to literally just pay it at closing.
Wow, that's huge. So you're actually getting the same benefit for half the cost. Okay, that's one thing right there. That's a fact, right? And then another thing that you're doing is you're reducing those monthly payments so that way as you're budgeting for your housing expenses, then you're working with numbers that are going to be so much more comfortable for you. That's fantastic. Okay, I didn't realize there was such a big benefit to paying that up front at closing. I mean, that's nearly a half, like 50% off.
Well, exactly. And that's where, I am, if you work with me, if you've closed a loan with me as a real estate agent or as a buyer, I am very honest. I give my buyers all the options and the pros and the cons. So there are pros and cons, but many times it's a much better option. If you have that extra money and you're going to be there, then it could make sense. Now, if this is for you, let's say you're a military family, but you've already used your VA loan and now you've moved here and you want to use that conventional loan, but you may have to report to California in 3 years. So is that $83 a month, 3 years in, going to be worth it against that $5,500? That's where you want to break even and see, do I think I'm going to be in this home long enough? And I actually can do that for us. How long would I have to be in this house before I hit that $4,037 mark, right? So
wow, that's brilliant. I love that. And this is important in the market because we do have a very driven military market here in Jacksonville. With the two Navy bases that we have here, Mayport and AS, a lot of our buyers are military families.
Absolutely. And I just did it. Don't make fun of me. I got my handy dandy. Everyone makes fun of my calculator, but it works for me. You would have to be in that house for 4 years. So if without a shadow of a doubt, your kids are starting school and this is going to be the house that you think you're going to stay in, then if you have the extra money and your goal is monthly payment, pay it, like, let's pay it off. If your goal is least amount out of pocket, I don't know if I'm going to be there, it might be beneficial for you to keep it monthly. But that's why your loan officer and your real estate agent need to go over with you. And I know Angela and myself do this, out the gate and throughout the process. What are your goals? What is important to you? How can we get you there? Because there's, as you can see, so many ways to get you where you want to be.
Sure. And every situation is a little different. This particular family that we're working on together, they're looking to stay in that home for a very long time. They have young children. They want to be able to stay there permanently and raise a family there. Where if you are a military family that knows that it's going to be a little bit of a different scenario. So it's important to talk about all of that up front and to realize what's the best way to go with that.
Well, and the family we were working on, that kind of sparked this conversation. And Angela was like, people don't know this is an option. We need to talk about this. Their situation was actually completely flip-flopped. I sent them the 20% down option on the house they were looking for, and they were like, we could do it, but that's really a little bit more than we want to spend out of pocket. We could go a little higher on the payment. We are comfortable with the payment going up maybe a little bit, but we really seriously don't want to bring that much to closing. And I said, but they also were very adamant, I do not want monthly PMI. I don't want to pay it. I don't want it. And I said, well, here's an option. Let's drop you from 20% to 15% down. That's 5%. On 500,000, that's 25 grand. They had amazing credit. So their PMI to pay it off was literally $2,300.
Wow.
And it's not monthly. And the amount, people think, oh, I'm going to put 15% down. My monthly payment's going to skyrocket. It really went up about $60 a month. So we got to get them everything they wanted. More money in their pocket. Payment was still where they wanted it, and they didn't have monthly PMI. So you can make these situations work for what they want.
Sure. So one question to ask is, would it be worth spending $2,500 to keep $25,000? Yeah, if you're going to stay there for a long time, absolutely. So there are ways of looking at this when you align yourself with the right experts to help you look at the situation and find a way to make it beneficial for you. We have another question.
Yay!
What if I want to buy a rental or commercial property? Is PMI just for primary residence, or could it apply to these properties too? Great question.
Ooh, okay. Now we're getting into the nitty gritty here.
Love it.
So conventional less than 20% PMI required. Just because I say it's required, like we've talked about, that could be monthly, single payoff, or the lender can pay for it, which we can touch on in a second. That being said, if you are buying a second home, the minimum down payment for that is 10%. If you do that, you are still less than 20% and you will still have PMI. There is a little, how I said, those PMI companies look at all the factors of your loan. There is a factor for primary, second home, or investment. If you have a second home at 10% down versus a primary home at 10% down, the second home's PMI is slightly more expensive. If you are doing an investment property, the minimum down payment is 15% down. And that PMI is, again, more expensive on the investment properties.
So it sounds like the private mortgage insurance is something that mitigates the risk of the loan, and the type of buyer, might have a certain risk factor that would be higher on an investment property than there would be on a primary residence. Is that correct?
That is 100% correct. And this is the, peeling back the curtain and getting like, what really is this all about? Many people are like, oh, it's just required. But the real deal is, a person who is buying an investment property with 15% down, who has a 680 credit score, there are different risk factors besides a person who has 15% down with a much lower debt ratio, who is putting, 780 credit. Those are those different risk factors that build into what rate is offered for your PMI.
Interesting. Okay. So when we pay this at closing, it could very much be rolled into the closing costs, right?
Correct. And this is where having those experts makes a difference. I have had so many times, Angela will get the seller to pay all of the closing costs, and I get with the title company, I get them whittled down, and we have $2,000 left over. Are you going to let that $2,000 go to waste as a buyer, or are you going to make sure you're like, no, every dollar, or do we make sure we use it? So I'll whittle it down and I'll say, hold on, the closing costs are $8,000, the seller's giving 10, the PMI is 2,400. Make that, pay that closing, and have the buyers pay the $400, and the seller pays the rest because we have left over. So there's, I don't know if that's confusing or not, but.
Well, I know that specifically, let's talk about new construction for a minute, because a lot of times what happens with new construction is you have like the total closing costs, not split up into buyer and seller. It's like one lump sum, right? But it's typical that a builder would issue somewhat of a credit to be applied towards that lump sum, that total closing cost.
Yeah.
So when we look at that credit, we want to factor in the amount that closing cost is, what we are getting from the builder, and make sure that we apply all of those funds towards that. So these things can be used for buying down PMI, reducing the interest rate, which I don't think anyone would even have to do these things because they're so low already.
It's crazy. It is a madhouse. Yes, rates are in an awesome spot though, for sure.
Wow, it's amazing, which is a total different topic, but, maybe we should touch on that just a little bit, because I know that's really, really hot right now, especially this week, and I could see that was coming from last week when the Fed, made some adjustments to make sure that we were getting the best possible interest rates. But what I'm seeing right now is I didn't think they could even get lower, but we're starting to see some in the 3s and the 2s already.
Yes, so that is 100% correct. I've called it, and I've spoken to a lot of my buyers recently, and I've called it a little bit of what I call the rubber band effect. So basically, the rates got way low last week, lower than they've been in decades, like literally crazy low. I've seen rates, I locked somebody last week at a 2.5.
2.5% interest rate, and that was a fixed rate for a 30-year loan?
It was a 15-year, and I did lock a 30 at a 3.125.
Wow. You guys listening, and this is amazing. It's like such a great opportunity. Quite honestly, it's like a perfect storm. And I feel like if people could just take advantage of the situation right now, this could set them up financially in such a fantastic way, because obviously we're talking about buying down the PMI. We're talking about getting historically low interest rates. So I don't think that there's ever been a time to secure a mortgage for the best possible and lowest monthly payment ever.
Yeah, and I tell people too, even if you're not buying, refinancing. Like I'm buying my own, I'm building a new house right now, and we do have a current mortgage on our current home. And my husband's like, "Why are we not refinancing?" And I'm like, "Because we're gonna sell it in 5 months." But it was so tempting to not. I mean, we could have dropped that rate over 2 points. So if you're watching this and you do have a mortgage that you bought in the last couple years, send me a mortgage statement, and I'm happy to look at it. No credit, no nothing. And I'll be honest, I'll tell you if it's worth it. But it's a great time to look at it. Purchasing, refinancing, it's awesome.
Yeah, and what I'm going to do here, Delayne, is I'm going to put your information on the.
I like that. Okay, yes.
Awesome. So you can see Delayne's information there and her contact phone number. So definitely refinancing. This would be the time to do so. Buying, if you're thinking of financing that home that you're buying, we're looking at historical low interest rates. And definitely ask us about buying down the private mortgage insurance, because that would even make the payment even more affordable. There's so many ways of working this magic, and I am just so glad to align myself with these experts to help us through your journey of homeownership. I really think that it's such a great thing. Not a lot of people know about these options, right?
No, people don't know. And I wanted to mention right before when we were talking about the builder, like you said, builders give you that, like a lot of times I think it's called, this is definitely your arena, but like the flex money, like you can use that money however you want. Let's say it's $5,000. Many people say, take it off the price. Take it off the price. I want it off the price. That $5,000, think about that. Over 30 years is $18 a month. And I just showed an example where you could use that $5,000 to pay off your mortgage insurance and save $83 a month. So get with your real estate agent, get with your lender. There's just so many different ways. I'm so happy that you invited me to come talk with you today.
Yeah, absolutely. And this is, just aligning these questions and showing people what to look at that they might not have considered, So yes, you would probably feel very excited about having a price discount on your home. If it's $5,000, yeah, that's a lot of money. However, those $5,000 savings, you're going to see over a 30-year period. So do you rather have the savings stretched out over 30 years, knowing that you probably won't be in that home that long? Or would you rather take that immediate benefit of the $5,000 as immediate savings on your closing costs, which is something that you are expected to pay out of pocket at the day of closing? So I will take it now all day long.
Hey, and you know what? I'm so embarrassed to say this, but I'm just going to say it because it's kind of actually hilarious. Like I mentioned, I am building my own home, and guess who took the
What? Hello. Are you there? Oh, there goes.
There you go. Am I back?
No, you're back. You're back. Yeah.
Okay, perfect. But I took the discount off of the price, and I don't know why I did it. It was, I don't know. We are putting 20% down, so that was a non-issue. But I could have used that in other ways. I just was spacing out.
Oh man, you should have had me as your realtor. Hello.
I know.
Absolutely. There's so many different ways of doing this. And, I think a lot of this stuff comes from personal experience, from having helped thousands of families, achieve this opportunity of owning their first home and their second home, and sometimes their retirement home. And sometimes they have to balance the whole scenario of selling one home so that they could buy the next bigger home. There's so many things to look at. So we definitely want to align ourselves with people that know the road and they know exactly, how to go that. So anyways, I am so glad that you're here today. Thank you for joining us, Delayne. I appreciate you, and you're welcome to come back on my show anytime, darling. Bye.
Bye, guys.
So I am going to go ahead and wrap up the show. Thank you so much, guys, for watching. It's been so exciting to have these videos every Friday morning at 10 a.m. They do have the replay factor, so if you are not able to catch the live session, this will be on replay, so you can always come to my page. I ask that you please share this with anyone that would be in the market of either buying, selling, or investing in real estate. I have tools, resources, and the right expertise and connections to help you guys get through this. And with that said, I'm going to go ahead and give you guys a gift for watching until the very end of the video. And this is actually something that I've put together. Is a seller's guide that could help you think about some of the things that you should be considering when it comes time for you to sell your home. Whether you're in the process of selling that home and about to buy another one, this would be a great opportunity for you to take advantage of this guide, or if you're just simply considering selling. So I want to go ahead and put that in there. And you can see on the marquee the website where that seller's guide would be located, so that way you can download that. Having said that, I also want to give you guys my contact information. So if anything comes up that I could help you go through, or anyone I appreciate that. Also, please be sure to share this. Once again, if you're watching me on YouTube, please be sure to subscribe to my channel. If you're watching me on Facebook, please be sure to share this. And I totally appreciate you guys. Thank you so much for watching today. And with that said, I'm going to go ahead and wrap it up. Remember to be kind to one another. Bye now.